Now let's get an update on the day's business news. Yuka Roy is with us in the studio for that. Yuka, starting with TikTok, aren't you? Now, the video sharing app has had a last-minute reprieve. This is from the ban on US app stores.
Indeed, Stuart, the saga continues. A federal judge in Washington ordered a stay on the ban hours before it was to go into effect. It means that the app will remain available for download on US app stores. TikTok had requested a court intervention, saying the ban wouldn't make sense when negotiations to restructure its US ownership were underway. The company said it was pleased with the injunction. The Trump administration says the popular app poses a threat to US national security because of its links to the Chinese Communist government.
Staying with China for this next story, China's seeing more signs of a solid economic recovery after the coronavirus pandemic.
Well, profits at Chinese industrial firms grew for the fourth straight month in August, according to the latest official statistics. This was in part thanks to a rise in commodity prices and increased activity in equipment manufacturing. Rising demand has boosted China's recovery from earlier lockdowns. Now, earlier in our programme, Stephen Innes, head market strategist for Asia Pacific at AxiTrader, told us more.
Data augurs really, really well for the China growth story, and investors like that. I mean, that's just a too big to miss narrative over here in Asia. But I think if we're looking at stocks in general, this is a very, very totally centered on tech right now. I think tech provides the COVID hedge, so to speak, in the sense that if we do move back into more of a lockdown situation, well, tech stocks are going to continue to rise. The reason being is people will use technology more. So that's the segment of the market that's doing well. The other segments, not so well. The entire focus right now on the broader scheme, when we're trying to look at the underlying baskets in the stock markets, those are just not firing higher. The leisure, autos, banking sectors, none of those are moving up. And this is really the broader level of concern that the markets are getting held back by. And look, if you like tech, jump in tech, but certainly be careful if you start looking at other options, especially with Europe potentially moving back into the COVID abyss by stepping back into lockdowns.
Stephen Innes there in Bangkok. Let's have a look at the markets now then, Yuka.
Asian shares mostly rose this Monday, though US-China tensions have weighed on certain sectors like semiconductors. South Korea's Kospi rising more than 1.3%, as you can see there, and Shanghai rising just above the flat line.
Now, most that's being sold off this Monday is Toshiba. Its shares dropping more than 3% in Tokyo.
The move comes after a Japanese chip maker, Kioxia, announced it had suspended its plan to go public next month because of a recent ban on shipping parts to Huawei imposed by the Trump administration. Kioxia says was formerly Toshiba's memory chips subsidiary, which was split from the company as it struggled to recover from massive losses in its nuclear plant business. Kioxia hasn't been able to supply parts to Huawei since mid-September and says it's just not the right time to float company shares on the stock market.
Now, I'm very sad to say that Yuka and I have got some very, very disappointing news for you. This is for fans of BTS, the K-pop group. Their October concert has been cancelled.
That's right, well.
Very sad.
We're sad news.
Heartbroken. But they do have something else to look forward to, don't they?
That's right, and spend their money on as well. BTS management label Big Hit Entertainment is going public soon and has just set its initial public offering at 135,000 won, or about €100, at the top of its range. Institutional investors have sought more than 1,000 times the number of shares on offer, but die-hard fans are also racing to buy the company's stocks to support the boy band. Camille Nedalek reports.
Corporate stocks make unlikely band memorabilia, but they're about to be the latest hot ticket item, as the record label behind the superstar boy band BTS prepares for its initial public offering next month. One fan has built up an entire business around the group with this BTS-themed cafe. She says she's prepared to invest more than €100,000 to guard her favourite band from shareholder pressure.
그 부분에 대해서 좀 더 힘을 실어주고 우리 가수들이 하고 싶은 음악을 마음껏 할 수 있는 그런 기반을 만들어주고 싶어서 한 주라도 제가 좀 참여를 해야 되겠다는 생각을 했습니다.
The listing is set to be the biggest IPO in South Korea in 3 years. Big Hit Entertainment is looking to raise over €700 million by floating 21% of the company, giving it a market valuation of almost $3 billion, far ahead of other music industry rivals. Fans rushing to buy shares means demand could far outstrip supply, and run-of-the-mill investors could also get in on the action. When the label behind K-pop juggernaut Girls' Generation was floated, shareholders saw gains of almost 3,000% in the space of a few years. IPO fever has even gripped children, who are urging their parents to invest.
팔 것까지는 잘 모르겠는데 아빠가 일단 주식을 사서 오빠들을 만날 수 있었으면 좋겠어요.
The IPO will make millions for the BTS band members, as the big hit CEO gave them almost 70,000 shares each.
Well, €100 a share. It's a bit expensive, even, if you want to make a symbolic move to support the band.
I just love the idea of going to the AGM to meet BTS. Thank you very much, Yuka Roy, with Business News on France 24. Now then, love is